let's dive in and kind of look at what the Sarnia market's been doing in December and see what opportunities exist. So as we talked about last month, there was a lot of multifamily homes active and had been for quite a few months, but we have seen it kind of pick up in terms of things getting sold. Right now, there's only 5 multifamily homes active, which is down from the previous month, and 2 are conditionally sold. So, I mean, things are kind of heating up, and 2 have price drops out of those active ones.
Welcome to the Canadian Real Estate Channel. My name is Adriana Ostapenko. I own Ace Properties, which is a multifamily asset management company. And we have about 130 plus units under management, 30 plus which are in development at the time. We're really heavy out on the East Coast. I'm also super passionate about giving opportunity to others for wealth building in real estate, as well as education and just inspiration, just like the Real Estate Channel does. I'm here with Sarah. Sarah is a local realtor in the Sarnia area and an expert in the market. She works really heavily with investors, helping investors get into the market and find really good opportunities. Welcome, Sarah.
Thanks for having me, Adriana. Super excited to kind of talk about Sarnia with you. I know you know a little bit about Sarnia, even though I don't think you don't have any investments in Sarnia, do you?
I don't, but I do love Sarnia. I have looked into Sarnia before, so I'm also curious to dive into with you about this. So I have a good friend that lives in Sarnia, and every summer we'll take a couple weekends and we'll head there because I love the water, I love the beach, I love the feel. So I really enjoy Sarnia, and I have looked at it in the past, but curious to hear more from you.
Awesome. Well, let's dive in and kind of look at what the Sarnia market's been doing in December and see what opportunities exist. Okay, so for those that have seen the channel before, you know that I cover the Sarnia and Lambton region. There are investment opportunities outside of Sarnia specifically, but for the sake of today, because you know there are many different markets, I just focus on Sarnia to break down the regions and kind of what's happening. So just some quick notable tidbits to start. So as we talked about last month, there was a lot of multifamily homes active and had been for quite a few months for various reasons. You know, either the price was too high, rents didn't make sense, but we have seen it kind of pick up in terms of things getting sold. Right now, there's only 5 multifamily homes active, which is down from the previous month, and 2 are conditionally sold. So, I mean, things are kind of heating up, and 2 have price drops out of those active ones. So I think it's showing, even though some owners were like kind of holding on for that money that didn't make sense. I think they are kind of getting that fear and itch that they just want it sold, right, at a fair price.
I think it takes a minute for sellers to realize that the market has shifted and adjust their expectation, and those that really need to sell will now have to adjust. I wanted to ask you quickly, what's the price per unit? Let's say these 3 ones that are available on the market right now.
So the price per unit is low, or pretty good. Like there's one that the price dropped. It's a nice home, and it's a duplex legally, and they lowered the price to $329. So the price is low. The issue is the rents are low.
Oh, so tell me about the rents. What are normal rents like for 1-2 bedrooms?
Yeah, so right now, so for example, in that specific one I'm talking about, the rents are kind of like 5 to 10 years ago rents, where you know they're like $650 or $750 all in, which now, you know, getting into a 2-bedroom or a 3-bedroom, kind of even in a duplex, you're looking, you know, closer to that $2,000 a month all inclusive. So the spread, like, yes, there's a huge opportunity to make money in terms of the upside. It's just you still have to get those tenants out in a legal manner. So unless you're willing to kind of move in for a year, or, there is an issue or an upgrade, it's something where the disconnect is still between the seller and the asking price, because 2% cap rates don't work anymore, right?
That's right. Incredible. I didn't know the rents were that high. I remember I have my close friend that lives there. Her rent I thought was high for how much the house was, but I think it's gone up even more since we last chatted. So fantastic. I think there's definitely opportunity there.
Yeah, rents are actually quite high. I mean, for being a small town, but I'm going to say the average rent, like just to find something, livable, you're looking at like at least 1,800 plus utilities. Some basement apartments, and I was surprised, I sold something to someone. It was it was a duplex technically, but the basement was just a basement, and this was 2 years ago. And I'm like, oh, you can probably get like 900, loose ceilings, like it's just something. And she was getting 1,500 a month for the basement.
Oh
Like it was clean, it was in a nice area, but it wasn't anything miraculous. It had 6-foot ceilings. You weren't going to be a tall person in there.
If somebody purchases this duplex, let's say for the 300 odd, and then rents one of the units for 2,000, the other one even for 1,500, that's a really good cash flow return right there.
Yeah, so it's really just finding these places or having the opportunities and the workarounds to get the tenants out or to up their rents, again, in a legal way, right? That's the biggest holdback. And yeah, like even there was one, I think it lowered in price, the one conditionally sold. It was like, I believe it was an 8 to 10 unit, and it was up for like 1.4 million off the top of my head. But again, the rents were so low or people weren't paying. So you have to be that investor that knows how to go in, and it's not always for the first time investor unless you're really savvy and want to work a plan. But the prices are quite low compared to Niagara, Toronto, where you're like, how are you making money? Because the rents are similar in some cases.
They certainly are, and you don't make money in a lot of these markets. You're either putting a lot of money down, or you buying at a good price and buying the troubles, I'm going to say, or the strategy of turning over the building to be able to bring the rents to market value.
Yeah, or you're hoping, I see other investors or realtors saying, well, the average is we're going to gain 15% on the price in the next 3 years. It's like, well, how can you forecast that when interest rates are still variable? Like you can't jump into an investment just assuming holding it, you're going to make money in less than 5 years.
That's definitely not my style.
No.
It needs to make sense right now. And I feel like for a lot of investors, especially beginning their journey, that's not really their option either. I think if you've been in the game for a long time and you have so much resources and assets that you don't mind losing money or just, playing your cards and seeing what's going to happen, that's a different strategy. Not my case. I like to stay within the numbers. I like to make sense now as well as later.
Yeah, and I think if you're taking a gamble, the casino might be funner than dealing with.
So I don't have fun in casinos. Like lose money. Like, how is this fun? Like, I don't understand this. So,
but that's like the same analogy or whatever of buying a terrible investment. Like, do you have fun losing money? Like, so that's why we need to really make sure as investors and as realtors helping investors. I mean, we can't always change someone's mind, but make sure we have laid out all the possibilities in your backup plans.
I love that. Do you find that sellers are at any point in time willing to do some of the work with their tenants? So if the sellers themselves were to approach tenants and offer like cash for keys to see if the tenants were willing to move out, do you find that sellers are ever willing to try something like that?
I'm not sure. Like in some ways, yes. I know there was one and it was conditionally sold and my investor wanted to see it. And I said, well, why is it conditionally sold? And the condition was that the buyer got to talk to the tenants. I think about raising the rents or, trying to work something out. I'm like, wow, that's a bold condition. And it didn't work. So now whenever I see it up still, I'm like, well, obviously as an investor, like, just be warned that someone already tried to talk to them and it didn't work, so that can go both ways. I had another call from someone who watches this channel and he had found it was, on paper, a great deal, great price point. It was less than 100,000 a unit. But again, The tenants were all on ODSP, which is great. It's money coming in, but it was ODSP rates of 5-6 years ago, which was $600 a month, all inclusive. It's like, you can't really work with ODSP to raise, even if they're good tenants. So I said, why don't you talk to the landlord, or not like landlord owner, because this was a private deal, and see if he'll, he wants to sell it. Ask him if he'll give you a mortgage at 2%, because it makes sense at that. Like, maybe he saves some capital gains. I haven't reached out to see how it went, but let's try and be creative. If they want to sell, maybe a 6% mortgage isn't going to look favorable, but maybe a 2% is if the owner holds it. Let's try and make something work.
100%. I think getting creative in this market is important. I think last year, the last couple of years, everybody's just been laughing a little bit. It's just been easier in so many ways. Although, competition was stiff, you had to put offers in and multiple or cash offers. I feel like now we have a chance as investors to get creative, to introduce new strategies, to actually negotiate and work with the sellers to provide a win-win-win for everybody.
Yeah, and I do think 2023 will be a time of opportunity. I mean, I follow stocks, I follow real estate, and even the last week, all that you hear is recessions coming, these things, and yet the stock market's rallying, and you're like, this doesn't link, this doesn't make sense. Something is coming in terms of, whether it's big or small, and opportunities will be present. The last few years, the real estate has been a lot like the stocks, it's going to go higher, it's going to go higher. You're just playing the ladder chase. And if you got out quickly, you did well. But a lot of people that are on this long-term track, they need backup plans, or they needed to do their numbers right and not assume that the 5% or 3%, 4% cap rate was going to be okay forever.
That's right. That's where the savviness of investors or experts like you to help investors, understand the deal and what are their options.
Correct. Yeah. So I think it's exciting times ahead, and that's for not just Sarnia, but any market. And, we can look at one way, people need money and you're helping them out and you're making a fair deal all around for everyone, right? December was definitely slower, as it was, I'm sure, across Ontario. December generally is slower. People are like, well, it's the holidays, I'll reach back after. There were still bank interest rates hikes, so that fueled it as well. But even just the first week of January, I have a new listing. I've had showings, bookings, everything. It's not the spring market, but it is picking up, right? Where people are holidays are over, let's kind of see what's happening.
Amazing. Do you find that, so based on just the listings that are on the market, you find that demand is still high? And I'm also curious about the vacancy rate in Sarnia as well.
Yeah, so we'll get to, I have some charts on the sales and stuff. Vacancy rate is really hard because unlike the bigger cities, where a lot is done on MLS, things like that, in Sarnia, a lot of rentals are just done on Kijiji privately.
I see.
So a lot. And even my investors, I say, you know what, maybe a property management company if you're from far, or try it yourself. Happy to help you on MLS, but that's not where the primary at this point is of people finding rentals. In my experience, it is quite high. If the price is, not crazy, $4,200 a month, there are quite a few applicants, but it's finding the applicants that fit. So there is still a lack of housing. And a lot of workers or, temporary workers, students coming in. So the demand is high for rentals as long as you're kind of at that right price point.
Makes sense.
The market, I'd say, still is definitely concerned of the future. I mean, I got my variable statement back from last year from one of mine, and it was it went from 1.35 in January of 2022, and then it was at 5.35 in December of 2022. So I think this is still going to be a concern for many people who took those variable rates, because fixed, you can't really at this point, unless the recession hits and things go down, it's still basically the same as your variable. So people saw some really big increases, and I think that will influence the market for 2023 as well, because as time goes on, people will need to either sell if they've bought a lot of disposable things beside their home, or figure out kind of additional income streams.
Makes sense. It definitely hit a lot of people. I actually haven't felt it personally on my personal portfolio. We had all of our mortgages were fixed, and so none of them have gone up yet. Although we do have one refinance coming up this year and a couple next year, so we're going to be watching closely. I've been just doing some math on what that's going to look like for us. But they're also all cash flowing. So my hope is that we'll at least even out with the cash flow.
And that's a good point too, because even 5 years ago, 2017, 2018, the rates were still a lot lower. So they were, 2, 2.5, like in that range for residential. So if people are at their renewal point, they're still looking at a doubled mortgage. Yes. And in that time, if people buy cars and, lines of credits and things like that, we are still going to be seeing a different market, because we have been used to this, let's say on average, of this 2.5% interest for the last 5 to 7 years, right?
Yeah, there's definitely a delayed, consequences here too for those that are like me, haven't really felt it yet, but it's coming. So there would definitely continue to be like a ripple effect in the market, at least in the next couple of years, is my thoughts.
Yeah, and I've heard it from some investors too. Someone that was looking to come from Toronto to here and buy a personal home, and they're like, well, I might sell my duplex and my triplex, in Toronto, because both of them are coming up for renewal. That's right. So am I better to renew at a higher rate, or should I just take the money out and kind of live my life? These were retired people, different point in life. So I do think over the next few years, if the rates do stay higher, we might start to see that, as people are just tired of the headaches and don't want to renew at that higher rate if they still have mortgages.
Makes a lot of sense.
Yeah. So looking this is kind of showing the sales activity. So it goes from 2018, and this is just for December. But I think this shows kind of exactly what we're talking about. Starting in 2018, we started to kind of see multiple offers, that kind of thing, like the rest of Toronto and Ontario have had for a while. Then COVID hit and things went wild, right, for the last 3 years, which has shown basically a double in sales activity and sales. But with 2022, December, it came back down closer to the 2018 level. So we're starting to see a more balanced market, like we've been talking about, but still the demand is still higher than 2018. So people are still needing these homes. Things are still selling. It's just sellers, as we discussed, have to readjust. And there's not these crazy bidding wars per se, as we've seen the last 3 years.
Fantastic. I love that. Gives you a really easy way to look at what's happening in the market. And this is what I've been hearing as well. We're almost back down when some of the markets were exactly even out with 2018. So it's interesting to see the cycle come back down to levels, and we'll watch closely what 2023 brings as well.
Yeah, and I think the demand especially shows, if we look at kind of the average price of a sale home, it's still holding high. It's still $539,000, I believe it was, in Sarnia for December, which is showing that's still, I think, up 10%. I don't have my numbers right in front of me, but it's still up from when the prices and interest rates were 5% lower. So, I mean, people are still buying those higher priced homes. Prices have come down from old highs, but not in correlation with how much interest rates have rose. So I still think that does show the demand is still there. Months of inventory. So it's not a vacancy rate, but I think for sales it shows. Again, the balanced market is back. So 2018 and 2022 December, 3 months of inventory. So the inventory is there. I log onto my system, I see it there, whereas the last 3 years, especially last year, as prices kept getting crazy, you'd log on and you'd see, just a handful of homes for sale, and you're like, well, I can't send you any listings because there's none here.
So we purchased a home pretty much at the peak of the market ourselves, and I remember it was the same thing. We were just on a hunt every week, and properties would go on the market. I mean, just outside of Toronto, in a city called Georgetown.
Mhm.
And there would be maybe 1-2 listings a week that would come, and they would sell immediately over asking. So it was a crazy time to be purchasing. And now we drive around and there's a lot of for sale signs, at least in comparison with what we were looking at in December of last year.
Exactly. And I mean, as you know, buying your home is different than your investments, but it's sometimes hard to flip that switch between the two of them.
It truly is. Definitely, my husband was way more in favor of getting in the market right away than I was, but it is what it is. We love our house. We're planning to keep it for long term. So, and we have a fixed mortgage on a good rate for now. We appreciate that.
Yeah, and that's what I say. Like I joke that, this year's the year of the mortgage for me. Or even, last year, it's like, let's reallocate, like maybe money doesn't go in RSPs this year, other things, because, yes, I get it. Better when you're younger, better long term. But I'm like, how much interest are you going to pay on your mortgage in 2 years? You got to kind of look at it and restructure, right? And just look at what you're doing with your money. Market activity here, so active listings, very similar to the last one, but we actually have more active listings than we did in 2018. So I think this kind of explains why the average day on market is now over 30 days. So it's a little different. Also, as we discussed, definitely influences sometimes by seller's price point being higher as well, or than what it should be. But people are being pickier. Even my newest listing that I have out now, really nothing bad to say about it. Like, no one has bad. They're like, oh, we love the home, but people are just getting pickier. It's like, oh, well, maybe it's a bit too big. I'm like, well, that's better than being too small. It's even like a first time buyer's price point. It's like, oh, maybe it's too big. Where, last year the adrenaline was there and people didn't care. It was like, well, this home's in my budget and I want a home.
That's right. It definitely, again, that's the balance that's coming into the market, where sellers have the upper hand and now buyers are like, wait, maybe I have a bit of an upper hand now and I can pick on things like the house is too big. So.
Yeah. And I can say I'm going to need a few days to think on this, like it's just totally different. So everyone just needs to readjust with it and realize that this is kind of what it was and should be. This is what I do for any new viewers. I do this every month. It just kind of shows everyone the areas of Sarnia that I believe are, investable. Point Edward is investable as well. The price points are just higher and there's, less multifamilies. It's more of a residential area. So I've just broken them down. You could break them down further, but for the ease of this presentation, South End, Sherwood, Central, and North End. North End, just brief recap. You want to live there. Everyone wants to live there. Usually, you're closer to the water. There's nicer homes, nicer grocery stores, but also the price point is higher. Better schools. Central, there's lots of different neighborhoods in here, from, older war times homes to newer subdivisions. Lots of townhouses in this area, close to malls, close to things. This is a really investable area. It did get kind of expensive in COVID area, minus multifamilies. Like, it was harder to buy a single family home and make that make sense. But they are coming down. Sherwood, great area if you want to rent to students, great family area, great starter area. People love Sherwood, even though it's technically South End. And then South End has been the bread and butter of a lot of investors, especially over COVID for flips. It's always been the lower end of Sarnia, but people were forced to move there with price point going up. So it has improved a lot, the area. And there was lots of homes to flip because, there was lots of distressed homes. So wholesalers, private buyers, door knockers kind of, relied on that end because they were able to get homes at a good value and still have money in there to make money, even now if they bought it a few years ago.
So is there any area so you're explaining about the South End, is there any area that's like, the tougher area of town that just needs that uplift?
So that would be in the South End, and some of the South End streets are really clean and nice. And then, you go by some just like any city and they're a little rougher, but that has changed a lot since COVID because of the influx of money and people going to those areas. There are some in the central areas too, like one street over is bad, one street's good. But in comparison to even like where you live, Toronto, London, it is not bad. You know what I mean? It's small town bad. Like littering, stealing things off porches, it's maybe someone that goes to a methadone clinic and isn't, fully in right minds walking around, like just different areas. But it has cleaned up a lot, and it is a very investable area.
So I have a multifamily, a small multifamily in Chatham, Ontario, which I know it's not too far from this area, and I absolutely love it. We also had a bigger portfolio in Hamilton, and in comparison between the two towns, we love our Chatham property. Like in terms of the tenants, the pace, everybody's just blue collar. There's not a lot of issues. Hamilton, on the other hand, is a constant. There's always constantly something happening there. So I think there's something to be said. Smaller, quieter towns just also brings a smaller, quieter, blue collar, friendly, hardworking kind of tenants too. And that's been our experience in Chatham.
Yeah. And I think Chatham it's about 45 minutes to an hour. It is a very similar. You might even find, I used to work in Chatham years and years ago, some worse streets than in Sarnia. So almost more drastic difference. Like you drove around the town, you've seen it. So I would say it is very similar, except Chatham, you get like those, there is in some ways a drastic difference, from the lower end to the higher end. You get those massive, huge mansions. And, Sarnia is also blue collar, similar jobs, except there might be a little more equilibrium in terms of the medium, like that medium family, because there is a lot of, we're close to Chemical Valley and the plants. So there is a lot of blue collar jobs that make really good money. So it might have more of a homeostasis in the middle versus kind of higher end, lower end. But Chatham's also a bigger community than Sarnia in many ways. So very similar. I definitely would agree. As long as you find the right pockets, where obviously if you go to the worst street of Chatham to buy a rental, you're going to get less money and worse tenants, right, than a better street. So it's finding those pockets just like Chatham.
Love it.
Yeah. And I always do this disclaimer as well. I do think these numbers are pretty much right, minus the one Sherwood outlier. That happens a lot there because there are a lot of townhomes and then bigger homes. So with Sarnia being a smaller market, there's not always, 100 sales to average out. So sometimes there are outliers. For example, the South End. So, in December 2021 or the year before December 2022, the average price was about $300,000. And then this past December, it was $291,000. So it went down about 3%. I would say this is pretty accurate as the interest rates took a toll on that. Between those months of December to December, though, the market down there went wild. Like, there was homes selling for $400,000, like nice homes, but still the market went wild as it did anywhere in that specific area.
Makes sense.
Yeah, still very investable as long as we're finding the deals. Sherwood, so when I see like 440 in December, I would say there's way less condos and townhouses selling in that area. There's definitely still homes selling in that price point, but there was also a lot of condos for sale. So I think those numbers are skewed. Investors do not think if you buy there, you're just going to, get 13% even in tough times. The market has went down there as well. Central Sarnia, I'd say again, all these numbers, things are still selling. They're just really showing the results of the interest rates. Interest rates have went up 5% as we discussed in the beginning. So yes, the market has went down, but still not in relation to how much of a mortgage you can get really in terms of month over month. And then the North End, the average home price, that's about accurate as well. Still definitely homes selling for $1 million, homes selling for, $480,000, but that would be about the average you're going to pay if you want to live in the North End in a detached home.
It's beautiful there. That's where we spend time. When we go to Sarnia, the water, the beach is just really nice there. Really nice homes.
Yeah, and it's really nice. And I think what makes the North End less desirable even now to like as an investor, not as to live there, but as an investor, is that Sarnia put a ban on Airbnb. So even if you find
Is
a nice
this all
home,
over, like the whole town?
yeah, all of Sarnia.
Wow.
So I mean, unless you live in the home and you kind of get a permit from the city, I mean, there are, and I don't know exactly the discipline if you do it illegally, but I mean, you don't, as an investor buying something, you want it to continue, right? So
When did that come about?
about 6 months ago. So it was in talks for a while. A lot of people, I think some people got grandfathered in too, but it just changed. So that kind of extends all the way to Brights Grove because Brights Grove is also Sarnia. So it definitely hits even the cottages you can buy now. They're in my mind cheaper than they should be because you can't even rent them out as an Airbnb. So even if you want to use it plus Airbnb it, it's not really legally possible.
Got it.
But if
That's
you're on the Plimpton, Wyoming side of Brights Grove, you could rent it out because it's not Sarnia. So if you're a few roads over, almost Kimlaki, you know, so that's where I'm saying there are investment opportunities outside of Sarnia if you want to Airbnb or have a cottage or mixed use. There's Airbnbs that do really well in Petrolia just from workers that are going to the plants and it's a 20-minute drive. But in Sarnia, technically Airbnb isn't allowed, so that cannot be a backup plan.
Does that include other types of like midterm rentals or corporate rentals? Like you just said, workers need a place to stay. Like, does that
Yeah,
impact
so
that as well?
Airbnb generally, without having the stats on my head, is less than 30 days. So there is still many people that do furnished rentals, you know, like for plant workers or people coming in corporate. Those you would find more on like the Kijiji style, like furnished rental, you know, 1 to 3 months, 1 to 6 months. You definitely get more money for them. You're just not really allowed to get those people like yourself, maybe that's like, I want to come into town for the weekend and rent a whole space. You know, you would technically, and I'm sure there's still some up there. I don't know, you know, what the ramifications are, but unless you're going to someone's basement or someone's bunkie or someone is technically not allowed unless it was grandfathered in at this point.
That's really tough overall, all across the country, really, because so many people, the Airbnb hype came in. Obviously, it's really high cash flow. A lot of people bought cottages and other properties with this idea in mind, not expecting regulations to come in and take that option. So definitely surprising. And even if there's a town over that doesn't do that, you never know if they may in the future, you know, come in with the regulations. And it's a tough strategy to buy for, not knowing what would happen in the future.
Correct. And Grand Bend area, so more touristy, they also just went through this last year. They took a different approach, which makes sense because that's a massive tourist town and they do not have the infrastructure. And they just basically tried to put a ban on, you know, like having over 10 people, you know, like these places where the house isn't big enough and they're letting 10 people go in because they're getting massive money. So now I think you have to get a permit through the city, which makes sense. It's more just like they're going to check out your house. And if something happens, you know, X amount of times, then you're disallowed based on, you know, you're not keeping up your property. You're letting massive parties, you know, things that are disturbing the actual neighborhood and enjoyment of others. Because oftentimes, I'm sure you see it too, it's repeat offenders, you know, that are just trying to get the most money and maybe not caring about the home or the area. So they took a different approach and still allowed it. And I think the fee every year is like $100 or $200. And that basically just covers the person's job to, you know, manage it all.
In fact, yeah, I definitely regulations can be beneficial. It's always these outliers that don't really do, like you say, their job as hosts or landlords even, that end up bringing it down because you don't want to live in a house next to an Airbnb if there's parties going on every weekend and different people coming in and out and, you know, loud noises or whatever. So obviously there's benefits to that strategy, but that's also a good point for areas that are more touristy nature, maybe a little safer to purchase Airbnb. I was quite surprised with Collingwood being very touristy as well, and the regulations they've put in place quite a while back now. although specific pockets that got hit a little harder than others.
Yeah, and again, I think that's like any investment strategy we were discussing at the beginning of this too. We cannot just go into investments with one play in mind.
Yes.
Because a lot of people were buying in, even years ago with that, I'm going to make so much Airbnb, so I'm willing to pay more, but things do come up, and no town is exempt, right? People can change rules, regulations. Sometimes they grandfather you in, sometimes they don't. So we really do have to make sure we have those multiple strategies and not just, if this doesn't work, I'm going to lose.
Very smart.
And I think that is all for this month. So that is all I have to tell you about Sarnia for December of 2022.
This was amazing. First of all, it was so fun to just meet you and hear all the updates. This is really beneficial, incredible conversation for investors that are looking to the Sarnia markets. I would love for you to share your socials. If there's an investor looking into the Sarnia, how can they reach you? What's the best way to get in contact with you?
Yeah, so you can reach out to me on Instagram at She Will Sell It. Facebook would be the same, just facebook.com/She Will Sell It. And both of those platforms will have my phone number and email if you want to reach out in those ways. Any questions, feel free to give me a text is usually the best, or call, and we can discuss real estate in Sarnia.
Amazing, Sarah. Love that. Same for me. If you would like to follow IG, Instagram, it's Adriana.Ostapenko. Same thing with my Facebook. Feel free to follow to see our journey in the multifamily space. And maybe I'll see you there in the summer, Sarah.
Yeah. Hopefully I will.
That would be fun. So stay tuned for the next market update from Sarah coming up in the Canadian Real Estate's channel.